Good morning, it's NFP day today. We're going to walk through my prep for NFP, and so just to do a bit of a recap, there are a couple of things that we want to focus on here. One is taking market generated information, two is building ideas from that information, and then three is developing conviction and turning those into trades. And the idea here is that when we're trading NFP, the only thing we're thinking about is just trying to execute on those trades. So the first thing to start with is market selection, and let's ask why is NFP important? Well, the Fed have a dual mandate, which is price stability and employment, and we're seeing inflation in the market, but we're not seeing necessarily the employment changes that the Fed wants to see to change rates or to start tapering QE, and so that's why this is important. And then if you think about what market should that drive trade in, well, it doesn't make quite as much sense in equities, and they've been quite choppy on data like this. But then if you think about bonds, well, that makes a lot more sense because it's a lot more directly related to rates. Then if we're asking what bond do we want to trade, well, we're better off trading US bonds, so of course treasuries. So that's where we'll start today with the Tino. These are the daily candlesticks for T-notes, and you can see that the long-term trend's bearish. It's then made this broadening pattern here, balancing towards the lows, and the NFP rejection from last time still in play. You can see it hasn't been resolved. The weekly profiles are also interesting. You can see the NFP rejection here. There's two block kind of weeklies positioned above the POC of a bikini profile, and then we've got these congested lows here. In terms of positioning, you can see if we call this a block here, that the market's doing a lot of positioning towards the top of it. This offers great risk reward for the long-term trend continuation, and in the short-term positioning is from yesterday is short, and that's just because we opened up there, closed down there, and we've held at the lows. In terms of data and news, you can see here that the jobless claims data has been trending lower. And then here from Twitter are some of the bank estimates for NFP today. And you can see there's quite a lot around this 550, 500 area, and then a few more around 750, with the minimum here at 450 and the maximum at 810. So that's kind of the range of expected estimates. Okay, so let's come up with some concrete trade ideas and look at our conviction on them. One of the things is we see that the market's short from yesterday, so if we get a miss, then the market should go and unwind that positioning, right? But that's probably to be a fast trade. It's against the trend, so I don't really like that trade. There's that's going to be quick, and then you want to be out of that. If the number is a big beat, then here are those congested weekly lows that we talked about on the weekly profile, and so then the market should come down and resolve those one way or another, where it's like a more structured offer or a really fast one. Then the other thing is if the data's in line, well, because of the bias in the market and the fact that there's a great risk reward for a short, in the bigger picture, then if the market's oscillating around here, there's potential to fade up at the highs, or if the market kind of settles down and then starts to build some structure with good volumes and participation below that weekly pocket, the 18s, that's from that bikini week, then the market can auction lower, and I'll try and get on that trade too. So I've taken you through my prep, and that started with looking at market generated information, including technicals, positioning, news and data, and also levels. And so from that, we took all that information and we compiled it into ideas and trades, and then built conviction on that, deciding what we want to execute on and what we don't. And now it's all about just settling down and then getting focused and executing that plan. All right, all the best today, everybody. See you later.